But now, why would they hold Bitcoin? Why? It's not because it's the oldest crypto. It's not because it's the boomer crypto. It's because it's the only one that's fully decentralized. It's the only one that is completely trustless. It's the only one that cannot be expanded. That it's going to continue to take market value as the US dollar continues to debase. Bitcoin will continue to rise in value. It's that coefficient. There's just no way around it.
James Lavish has been outspoken on the fundamental factors influencing the rapid shifts in the global financial scene. Lavish asserts that growing fiscal instability and tighter liquidity are the direct causes of the current market volatility. Bitcoin continues to be extremely sensitive to changes in the money supply and institutional demand, whereas the S&P 500 and NASDAQ have experienced notable corrections. Lavish emphasizes that the main elements influencing the near-term forecast are inflation expectations, debt cycles, and central bank policy. Given the unprecedented level of economic uncertainty, the true question is whether markets will stabilize or experience more volatility. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
The reality is, look, the key word here is uncertainty. I mean, if you look back to last few prints of inflation, you could say, oh yeah, inflation's coming down. It's still stuck well into the 2% range. It's like 2.5 to 3% range. PPI numbers were over 3, so which is the producer price index. You've got uncertainty about Doge, how many jobs they've cut, how much of that spending coming out of the government, which was, we can all agree, last year, there's absolutely no question about it. The Biden administration was juicing the economy by uncontrolled hiring at the government level. And so now we're kind of clearing that out. How much is that going to impact us? How much is going to impact the housing market in DC? How much is it going to impact the spending out of DC? And then all of those people who are now unemployed and crying about it because they weren't doing anything and they don't have jobs now. Welcome to the private sector, everybody. So now the question is, how much pain does it cause for Doge to come through here and clear house? Just start, burning the weeds and the brush and getting it cleaned out. Well, we're going to find out pretty quickly. On top of that, we have tariffs. We have now the threat of and real tariffs that are coming, that are coming down the pipe right now. So is that going to be inflationary? Remains to be seen. So again, uncertainty. How much of that spending, we've cut about $200 billion, just under that, according to the debt clock. How much of that spending is going to impact the economy remains to be seen. All right. So I shared a window here, Misha, if you could pull that up for Noel. But Mike is right. We've been talking about the mean reversion for a while. And the question is, was there going to be enough liquidity to meet the expansion of multiples on the S&P and the NASDAQ? Or are we just going to have a drawdown? Well, we've had the drawdown, one of the fastest corrections in the history of the market. This is, top 10% drawdowns, fastest drawdowns in the history. All right. So we can all see that, yeah, it's due for a bounce, just like Mike said. Is it going to bounce? Or are we going to draw down further? One correction that I want to make on Mike is that Bitcoin has actually drawn down 30% from its all-time high. And so it has had a real steep drawdown here.
I use closing bases.
Okay.
Close to close. It's something you can actually trade. Selling the high and buying low. So I use actual closing bases.
Yeah, well, Bitcoin doesn't close, but that's fine. But
VWAP, then a VWAP price in the close.
Okay. So, but the reality is that we've had a really steep drawdown here, and we're finding footing. Question is the money supply expanding quickly yet or not? And the answer is the money supply is expanding. The question is just how quickly is it? And Bitcoin does lag all of that. So it's been lagging 2 to 3 months on the money supply for years. And so you can go back and chart it right against the global money supply, and it follows it lock and step. So did it get ahead of itself? It did get ahead of itself, and now it's drawn back. So we are not going to get a Fed put until we have more of a correction. I agree. We're not going to until we get more of a correction. But when we do get the correction, we're going to get the Fed put. There's just no way around it. You have to print more money. You have to expand the money supply. So that's number one. Number two, XRP there's no reason for you to be buying XRP over a stable coin. Fully agree. Have absolutely no argument there. Number three, let's go back to the expansion of the money supply, because here's the problem. And you know this, Mike, you're a bond trader. We do not have real returns in bonds. We do not have real returns in bonds. The return for owning a treasury is a negative real return for anybody who's held them over the past however many years, since at least 1971. So if you're looking at bonds and you're looking at Tether and you're looking at USDC as a store of value, you're making a mistake. You can put your money there, but you're going to lose money on it. Why? Because you're putting your money in the US dollar. The US dollar is a great and will continue to be. I am not one of these maximalists who think that in the next few years, Bitcoin's going to overtake the US dollar and it's going to become the global reserve currency. The dollar is going to continue to be the global reserve currency, and USDC and USDT are going to be a key part of that, because it's going to enable people to buy treasuries anywhere in the world very easily and put them on any platform that they want to be in. And by the way, we haven't even talked about SOB 121 being repealed and the fact that banks are going to be able to hold all these things too. But now, why would they hold Bitcoin? It's not because it's the oldest crypto. It's not because it's the boomer crypto. It's because it's the only one that's fully decentralized. It's the only one that is completely trustless. It's the only one that cannot be expanded. That it's going to continue to take market value as the US dollar continues to debase. Bitcoin will continue to rise in value. It's that coefficient. There's just no way around it.
As James Lavish notes, financial uncertainty is a global problem rather than merely a U.S. one. Although there is still some uncertainty surrounding China's monetary policies, it is generally anticipated that the nation would continue to increase its money supply in order to maintain economic expansion. For economies to prevent a debt crisis, the money supply must be continuously expanded. This contributes to the larger global liquidity cycle. Lavish highlights a crucial lesson in his concluding remarks. The global financial system relies on constant liquidity expansion. The notion that governments will suddenly give budgetary responsibility first priority is not feasible. Issuing more debt and increasing the money supply will continue to be the norm, notwithstanding the political arguments around deficit spending. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
Now, I did share something that I'm going to tease Dave back up here. I did share something, Misha, if you could bring it up, talking about the expansion of the money supply and liquidity. There you go. So this is Michael Howell. He does a lot of work on global liquidity. You can see that global liquidity bottomed out in this mini cycle. Okay, he says there's like 4 to 5 year cycles or 5 to 6 year cycles on the total money supply expansion and contraction. But in this little cycle, we bottomed out at the end of 2024, beginning of 2025, and we have risen sharply. Okay, why does that matter? It matters because we've been talking about this. I've been saying this for so long that you have Bitcoin got way ahead of itself. Yes, we all agreed. So the question was Bitcoin going to correct down 50%, or was the money supply going to come up and meet it somewhere? Well, we could see what's happening. It's meeting it. Remember, this is a money supply curve that's delayed by 3 months because it's the way that because Bitcoin lags. But look at where it's about to touch. So I just disagree wholeheartedly that we're going to see Bitcoin at $10,000. That makes absolutely zero sense to me. The reality is what Dave said, is that we live in a debt-laden society. There's no way to continue to have economic expansion without it being nominal. We have to have nominal expansion. Jeff Booth talks about this all the time, and you have quoted him before, Mike, talking about this, and that's the fact that you have this deflationary pressure of innovation and technology. It's reality. You've got. I can pick up my phone and have access to millions of songs here. I don't have to go down to Strawberries or Tower Records to buy a CD for $15 anymore. Most of the people on the show don't even know what the hell that means. But the reality is that you've got millions of songs at your fingertips for like 12 or $15 a month now. It's just insanity. Okay, so that is tremendous innovation and deflationary pressure on that industry. So why does it still why are those people still worth hundreds of millions of dollars and making so much money? Well, part of it is because global distribution, but part of it is just because the money it's just not as worth as much. You continue to debase the currencies, and I agree with Dave wholeheartly. And it's not just the US, it's a global phenomenon, and it must continue. And if we're gonna the reality is that inflationary pressure versus deflationary pressure that's what you see when you have these central banks step in and have their put. They have to expand the money supply because we are living on debt. And look, I want to make this clear again. I've said it many times before, but the reality is that debt is okay if you use it in a responsible way. What we're finding out is that we are not being responsible in the US, and the whole globe is not being responsible with using it. We have no idea what China is doing, except we can pretty much all agree that they're going to expand the money supply rapidly to keep the train going, which, to quote Lyn Alden, another one that we love here, is that nothing stops that train. Nothing stops this liquidity train. It has to continue to expand, because otherwise all this debt is going to be an avalanche that we can't get out from under. It's already bad enough.
James Lavish highlights a basic reality of the modern economy. It is totally reliant on the growth of debt. He emphasizes that inflation and liquidity expansion must continue in order for sustained economic growth to occur in nominal terms. He highlights Jeff Booth's observations on the deflationary pressures posed by innovation and technology, emphasizing how developments like digital music streaming increase the affordability and accessibility of goods and services. Nevertheless, because the value of money itself is declining, money supply increase guarantees that industries continue to produce enormous profits in spite of these deflationary effects. Lavish stresses that this isn't just a US issue, it's a global phenomenon. Central banks worldwide must continue expanding liquidity to prevent a debt crisis, as nations, including China, rely on monetary expansion to keep their economies afloat. He references Lyn Alden's perspective that nothing stops this liquidity train, meaning that debt accumulation and money printing will persist indefinitely. Lavish is skeptical that countries will achieve economic restraint in the future. He believes the United States will continue to run in a deficit and issue more debt to support the system, and he doubts efforts to balance budgets. He also highlights the geopolitical ramifications of this, pointing out that unless the United States facilitates their holding and use of the dollar, the BRICS countries will look for methods to lessen their reliance on it, even though they may not develop a new global currency. His message is clear. The financial system is built on perpetual debt expansion, and without continuous liquidity injections, the global economy could face an uncontrollable collapse. And as always, happy investing.